Hi there, Serial Trader here. Let's have a look at the major US indices heading into this coming week. And since my video before this most recent week, there was that nice bearish engulfing sell signal on the Friday, and that certainly produced a good result to the downside so far. And more importantly, it looks like we've done or are in the process of doing a nice clean 5 waves down off the top. So that would argue for either a larger 5 down for A or 1. Then we'll be expecting a big counter trend bounce up in B or 2. And then at least one more leg down in a C. Or if it's going to be more impulsive to the downside, a third wave followed by a fourth and a fifth. And it's too early to assess how that will progress. But we do have some important information, being that we have 5 waves down off the top, either nearing completion or in place at this point. And I'll go to a shorter term chart to kind of go over that. But before I do that, just back to these fib retracements I was mentioning last time. So we have the from the October lows there, going up to our most recent all-time high. And we've just come and touched that 23.6% retracement, which is, the absolute minimum in my mind retracement level. So we've just come to touch that. We're basically sitting on that as of Friday's close. And the next retracement down the line will be the 38.2% retracement, which is close to around 3150. Now, being that we are looking somewhat mature on a short-term basis to the downside, being that we can count 5 waves down here, we've hit this initial fib retracement level. Maybe on Monday we see just a little stab down, possibly to close this gap that we still have right here. And to close that gap, you'd have to go down to 3205. So let's just call it right around 3200. We weren't far on Friday. We got down to 3214. So maybe a little early weakness on Monday, and then perhaps start this larger bounce. But we'll have to see how things are looking Monday morning. Also, this Elliott channel, where I connected the extreme of wave 2 and wave 4 in parallel off of 3, which largely contained this entire move up. We've now decisively broken down out of that channel on a closing basis. So a nice signature would possibly be finish up our wave A or 1 fairly soon here, and then have that counter trend bounce up and maybe retest the underside of the channel, which was formerly support, maybe have it act as resistance now before starting another leg down. So that's kind of what I'm looking at here. As far as being oversold, well, we're not oversold on the daily RSI here. We're only sitting around 43. And the MACD is pointed down now. We have a bearish crossover on the daily. Now 4 hour, not oversold on the 4 hour RSI either. And the 1 hour, we did get oversold on the 1 hour here. And now we're actually diverging, so a little bit of a bullish divergence. Price making new lows. Hourly RSI is not, so that might be a hint. Same with the MACD moving averages. That might be a hint that we're going to start a counter trend bounce here pretty soon. But just so I point all that out, now we'll go to that hourly chart just briefly. So going off the top here, we got a nice 1 down, 2 up, nice long wave 3 with a gap there. Quite powerful to the downside. Now we have this wave 4 up. We didn't overlap with wave 1. It certainly got a little close to doing so, but it didn't actually do that. And if we just look at some fib retracement levels, so wave 1 did a little bit more than a 786 retracement. Or sorry, wave 2 did a little bit more than a 786 retracement. So nice deep wave 2. And wave 4, let's see the retracement that did a in between a 50% and a 61.8% retrace, and again with no overlap between wave 4 and 1, so that's good. Now looking at wave 5 here short term, it kind of looks here on SPX like we need a little bit more development. So we need a 1, looks like we got a 1, deep 2, maybe we got our 3 almost done, and then we'll need a 4 or 5. Now just a moment here. I wouldn't be too demanding of this. I mean, it could essentially, you could have a little stealthy 4 or 5 already and begin bouncing pretty soon. But just for ideal wave development, it does look like we need at least a little subdividing 4 or 5, maybe to a marginal new low after a little bounce here before we should be looking for that larger bounce up. But we'll have to see what happens Monday. Very clear message though. The trend of 1 large degree has now changed to down. So with a 5 down, we expect a 3 up and then another 5 down. And then we'll have to reassess. But I'm thinking the trade possibly early this coming week here, buy in for a bounce up. And then once it looks like it's topped out, maybe gets up close to this previous wave 4 level, we'll do some fib retracements at the time as well. Once that goes, close along, and then get ready to reposition for another leg down short. But again, we'll have to see what things are looking like on Monday. Anyway, though, nice clarity of the pattern. And I do also like that we just put in the last trading day of the month there in January. So a nice reversal there down right near the end of the month. So that's a nice little timing signature as well. So February, in overwhelming likelihood, will not be the same relentless uptrend that January was. Probably quite the contrary. Okay. So that's what I wanted to look at here, basically on the wave structure. Looking pretty good. Now we'll go to the Thinkorswim candlestick chart and some other things to point out, which also kind of argue for a bounce pretty soon here. Okay, so this is the SPX daily candle chart. Now you see we're getting real close to this 50-day simple moving average. Just about touched it on Friday. Missed it by a few points though. That would be a reasonable area to look for a decent bounce off of. Now, not a bounce up to new all-time highs in all likelihood, but just a bounce and then maybe reload for another leg down. But you will typically get a lot of reflexive, perhaps institutional buying at these big moving averages, so the 50-day and certainly the 200-day. So I wouldn't be surprised to see maybe one more little interaction with the 50-day moving average here, probably on Monday, early next week, and then start our larger bounce. Now, I do also like that there's this gap, which I mentioned already, but there is this gap that's pretty close, so it'd be a nice little target to fill this gap, slightly pierce through the 50-day, right around that 3,200 level, and then start the bounce from there. Now, if this is somehow a more powerful leg down, and we're not done going down yet, I mean, that's certainly possible, but I kind of doubt that, at least on the initial move down. Usually you do get, when a trend starts breaking, you get that pushback after that first leg down, that nice reaction rally. So I think that's the more probable scenario here, is a bounce pretty soon, and certainly a short-term long entry, and then look for another short perhaps. But again, we'll have to see. Now you can see that on the T line here, as soon as we broke down below the T line, it stopped acting as support and started acting as resistance. We never really did convincingly close back above the T line after breaking it, and now we're certainly heading back down again. And okay, so that's the daily candles. And again, just a nice example of that bearish engulfing from last Friday, producing a nice signal. Now on the weekly candles here on SPX, what do we got going on? Okay, so we had this kind of indecisive candle last week. Now we have a more bearish looking inverted hammer, and we did close below the weekly T line, so that's certainly a bearish technical development. And you see we just started coming off the overbought condition on this weekly oscillator and just starting to roll over, so nowhere near oversold, and actually nowhere even near a previous kind of pullback level, which was down here. Even if we don't get oversold, we're not even back to a common kind of support zone here on the oscillator. So that certainly argues there's more downside on the weekly time frame. Another thing I'd like to point out is, since we just closed the month, we'll do a monthly. Just have a look at the monthly candles here. And all right. So the monthly gave a nice bearish signal here. So here we have an inverted hammer. So that's a bearish monthly candle. And that certainly argues that a significant top has been put in on the monthly time frame. And you can see the monthly oscillator just kept getting more overbought, more overbought. Now finally there's a little bit of a bearish crossover, just starting to turn down. And that's a pretty powerful time frame to have a signal on the monthly there. Oh, sorry, clicked out of that. But yeah, definitely, I don't think you should be looking for a lasting bottom just yet. That's kind of the key message there. Okay, and we'll go to the Dow Jones Industrial Average. Daily candle, very much the same as SPX. We got 5 waves down on the Dow. We actually closed well below the 50-day simple moving average, so the Dow looking a little weaker there on a relative basis. I believe this was the equivalent gap on the Dow that we haven't closed yet on SPX, so we easily closed that and then some on the Dow. But I expect the Dow should bounce soon along with SPX. It's in a very similar technical situation. Okay, now on the weekly, on the Dow, anything standing out there? Very much a similar picture. Kind of an inverted hammer candlestick, closed below the weekly T-line. And monthly, let's have a look. Okay, also an inverted monthly hammer there on the Dow, so certainly a bearish monthly candle, implying that a significant top has been put in place there at 29,373. Okay, so that's the Dow. And we'll go to the Nasdaq Composite. Now this is a little bit different than the other two. So the Nasdaq Composite, we also had that nice bearish engulfing Friday. Certainly produced a good sell signal. Big gap down Monday. Now we had a big rally, but now we have another, again, kind of failing at the T-line, even though it was a big rally. Another bearish engulfing candlestick, engulfing 1, 2, 3 prior candles. So another powerful bearish engulfing candle. And unlike the Dow and the S&P, the Nasdaq did not take out its low on Monday. So it certainly looks like it needs to come down and do that, given this big bearish engulfing candle. And then that would make it a good candidate to go and perhaps touch its 50-day moving average as well. But the wave structure on the Nasdaq's a little different. So we don't have 5 waves down as of yet on the Nasdaq. We just have this initial move down, this pop-up, and now starting another leg down. So maybe just a different pattern. Instead of a 5-3-5 ABC perhaps in development, we just have a ABC down for maybe a W, and we'll do something a little more complex like a double zig or a double 3. But again, still directionally similar implications, but the pattern nuances certainly a little different here on the Nasdaq Composite. But still looking for the same kind of, you know, a little bit more down and then look for a bounce up. Now let's look at the weekly on the Nasdaq. Okay. Also an inverted hammer, a different color. So basically the opening and the closing prices had a different relationship there on the Nasdaq's inverted hammer, but it is still an inverted hammer nonetheless. Didn't close below the weekly T-line, so a little bit more relative strength there, but still implying some further downside. And on the monthly, let's see what kind of signal we got there. So monthly, also an inverted hammer, but again, the relationship between the opening and the closing prices isn't quite the same as it is on the S&P and the Dow. Again, though, the same implications. Okay, that's the Nasdaq Composite. Now we'll go to the VIX. Now the VIX is finally breaking out, which is certainly not a bullish development for the indices. We've broken multiple previous resistance levels, and if I just zoom out here, the VIX can certainly get higher. The next kind of hurdle to get over will be this, let's call it the 20 area up to around 2150. If we don't stall there, then the next kind of stop is up here in the mid 24s. But But certainly no sign the VIX has topped out just yet. Although that's another thing, once the VIX starts getting quite elevated, that's usually at least a very short-term buying opportunity on the indices, which would coincide well with the expected counter-trend rally that should be coming fairly soon there. Okay, so that is the VIX, certainly in an uptrend now, which is not good for the overall market. Now one thing, we'll look at that VIX tool. Okay, so we did have that nice sell signal that I pointed out in that last video, and we've certainly had good follow through. At this point, from the all-time high, we've lost definitely over 100 SPX points. Maybe getting closer to 150, not quite there, but so far a nice sell signal. It's still on that sell signal. It hasn't produced a buy signal yet. Now to produce a buy signal, you'd want to see VIX and VVIX start to diverge. So maybe VIX would make a new high and VVIX would not, or vice versa, and then SPX would turn up above this blue moving average. VVIX would get below its red moving average and SPX would get above its blue moving average, and that would be a buy signal using just this mechanical tool here. So it's certainly still on the sell signal. That's all I really wanted to mention. And okay, so just to summarize, game plan for early next week. If you still have some shorts open, I'd be closing them quite soon. I'd be looking for a short-term buying opportunity for a counter-trend rally. Looks like things are ripe for a bounce pretty soon here. And then once that counter-trend rally plays out and looks mature, starts failing at an important fib retracement or previous resistance level, something like that, then the trade there would be to try and get another bearish entry. So I'm pleased with how this is playing out. Certainly good for trading opportunity. It's kind of boring just having a market that crawls up a little bit each day. It doesn't offer the nicest kind of risk reward trade setup so you'd want to see. So this kind of action is certainly welcomed by me, and should be an interesting week coming up here. All right, that's good for now. Serial Trader signing off.